Hello and welcome to Crypto Weeklies. In this video, we'll talk about Mantra and its token Ohm. None of the content is financial advice. Let's get started with the analysis. What we have here is rallying crypto, which has outperformed most of the market for the last 7 days or the last 24 hours, as well as the last 30 days. Market cap at around 8 billion, a volume of about 640 million, has a max supply of about 1.8 billion, out of which more than 50% is in circulation. So if we look at the machine learning based price forecast conducted using techniques such as seasonal ARIMA, LSTM and XGBoost, the likely price action for the next 6 months for Ohm is between $7 and $32. That's the machine learning based price forecast. Right now the price is at around $8.35. This is the weekly averages based on what price has been doing since about the token launch in middle of 2020. On the other hand, if there is a correction, the price could find support between 96 cents and $5.38. You can see there are weekly ceilings and floors available on this chart in graphical view as well as in tabular format. The base case, which is this pink line, to its right are the three standard deviation bull cases, to its left are the three standard deviation bear cases for each week. So you can check them out on the website on the bottom of your screen, cryptoweeklies.com. It is free for all. You don't have to sign up or pay for anything. In terms of the risk levels, right now the risk for dollar cost averaging Ohm have been quite elevated. You can see that if you use this model in the bear market and with an hypothesis that only to DCA, let's say above 60%, sorry, below 60% risk, this model did a fair job in identifying some of the overvalued phases. If the hypothesis is only to DCA when the risks are less than 20%, this provides a great zone where the token is not in a bullish rally as a price point to DCA or a phase to DCA. In terms of the current risk, again, as we mentioned earlier, is kind of overheated right now at around 90 between 90 and 100% risk. If we look at forward guidance, the price action currently supports, again, with the data that we have, again close to 100% risk. And in terms of the dollar cost average base model, which is derived from the polynomial regression based fair value for Ohm, right now this comes at around risk of about 20%. If we look at some of the forward looking guidance for Ohm, again comes close with to our machine learning price forecast between $16 and $32. That's the risk based target. The moderate range between $16 and about $25, that's between 50% risk and 80% risk, and anything above 80% risk at price between $26 and about $32. If we look at the time weighted average price, again you would find that Ohm is kind of overheated at this point in time. Again, the risks are at around, if we ignore the other two variables, again the risks are at around 99%. And if we overlay this to understand what is the time weighted average price, is at around 51 cents. Again, accumulating below this blue line in the bear market usually works out for quality assets. If we look at the composite analysis of all the models, like a weighted average or weighted risk at around 55% as a composite of the three models that we saw, estimated bull run target at around $14.40, kind of close to the lower end of the machine learning based price forecast at around $16, representing a reward of about roughly 2x from here. And again, that would be the first level to watch. If it meaningfully breaks above, then the second level is at around $32. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.